Ladies and gentlemen, 365, shake my hand. Hope you guys are doing well. Welcome to another 365 video, one asset, one video type analysis, long wave analysis from the absolute beginning of time up until we understand where price is now. Understand where price is now means we understand where price has been, and we can then start to speculate and trade with high probability where price is going. This is video 4. That I've done in this, type of analysis. We've got a lot of assets to go through. I'm trying to pump these out as quick as possible, but also to make them as relevant as possible. So today we're looking at USDZAR on video 4. Please go back and first watch the Euro USD video, because in there there's a long introduction, there's an explanation to where I've been, etc., etc. I just don't want you to come across this video for the first time and assume I didn't address the big elephant in the room. For those of you who now are up to date and understand that it will take a long period of silence, 90-day period of silence to reboot, reconnect, all that kind of stuff. Thank you for your support. Thank you for your messages. Thank you for absolutely everything, right? 365. Now, the way I want to do this series, as I've said already, is to really try and keep these videos, manageably short, like as short as humanly possible, so that we can actually get to the heart of the matter and move on to the next asset in preparation for our war rooms in the month of May. War rooms only start when I'm done with all these assets, because I myself need to warm up. I still need to do some sentiment analysis. But because I'm back on the floor, I'm balancing a lot of balls, right? So USDZAR, without any further ado, I'm going to go to my 12 months chart. One candlestick represents 1 year. I'm using ICE as a broker. They generally have a lot of good historical data. If you don't like ICE, you can check out Saxo. You really want brokers that will take you all the way to the beginning of time. If you've done my module 1, right, and the link is down below for those who want to register. We've always spoken about, USDZAR as a buy profile asset, That's always been behind the students for dollar versus an exotic currency, right? This is a buy profile asset from the beginning of time. And this is during, even during, dollar weakness and bad terms for the dollar, or when Republicans are in power. If you look at the DXY, I did a video comparing the strength of the dollar under Republican and under Democratic from the beginning of time. I know that Republicans generally drop the dollar and pump the stock market and vice versa, right? So, nothing really changes when we're looking at USDZAR. We've got a solid buy profile asset right here. I just want to start to draw some valuable, almost, I guess would want to call it an immediate area of value. Granted, this is the 12-month chart, so price is currently reacting, simply put, to the 2018 long-term demand. This chart is of great importance to institutions, because this is what positional trading looks like. Positional trading is when you hold the market at a headlock, create the trend, hold the trend, control the trend for a very, very long time. This is not done by us retail traders. This is done by banks, institutions, hedge funds, central banks, etc. This is long, big money. This is investing through forex, not trading, but investing. That's what positional trading is. And we can see they take hold of a fresh 2018 demand, and price has been pumping ever since. 2018, price was pumping despite Donald Trump. 2018 demand was controlling things when Biden came into power. It controlled things when there was COVID, the 2018 demand. In 2020, this is 2020 there. So you can see this big candle flat down due to COVID. It controlled things when FOMC started to pump the markets with quantitative easing. It controlled things when last year when the FOMC started to increase interest rates, right? So as long as we have a demand in control, we are break profiles in these videos. Please check the link down below so you understand how to profile every single asset. Every single asset has a profile. Understanding that profile is the beginning of great trading success, right? So we've got a big break of market structure. We can see price bent down, created a swing low, swing high type situation, and then started to rebound again. This is literally in the 2010 era. The 2008, 2009 financial crisis led to a strong dollar. COVID crisis leads to a strong dollar. Capitalist crisis, safe haven flows, right? So it's a basic macroeconomic chart that we're looking at here, right? So now I'm going to really start to peel the apples. I can't draw any supplies on this chart because there are none. There are none. What does this mean? It means the day the positional chart changes its mind, the day price starts to fall non-stop, a complete plummet, we will be looking at an original turn. This is a specific type of area of value in supply and demand that we teach on in our module 1, which hasn't been created, so there's no supply to draw on the positional chart. I'm going to move on now to the presidential chart, which is our 3-month chart, and then we're going to start to really isolate some levels to see exactly what's cooking. Right? So I'm going to assume the 2018 demand I was telling you about right there. Clean bullish engulfing pattern, strong waves, markets come back in position. Potential continuation patterns formed, new bullish engulfing pattern during the COVID of 2020. Markets strike back here up until 2021, breaking that low but falling back into that 1-year demand, that strong area of value. Bullish engulfing pattern formed again. Markets come back in it in 2022, January last year, and a new bullish engulfing pattern is formed. So what I'm going to do is I just want to take the immediate areas of value, and more importantly, there's no point in drawing the zone. It was broken. So this, if price was to fall, what I'm looking at is what's the next big long-term play, because I'm still on big charts, right? So if price was to ever fall, this is literally where price would want to land, somewhere here, right? So we're looking at between $1 is 14 to 16 rand, somewhere there, right? So I've got a very clean zone, a high proximal line, a distal line right on top of my positional chart, my 12-month demand. When I'm looking at the chart, right, maybe slightly motivated to do something like this. But if I do something like this, I will say that the supply didn't work because it doesn't give us the type of imbalance we need. There are imbalance rules with trading that we discussed in our module 1. If I do something like this, however, ignoring the area of competition, also noting the fact that price has already pierced the so-called supply, that I'm still trying to assess if it's a supply on the presidential chart, you can see that for me and the way I teach trading, once price makes contact with the demand and does not sufficiently meet my imbalance rule that I teach, then I'm happy to say right now at this juncture, there is no presidential supply. Let's really break this stuff down. We are on the 3-month chart, right? Remember, banks think in 3 months, take profit in 1 year on a 10-year span, right? So within 3 months, we're looking at per financial quarter. Every single candlestick you're looking here is a financial quarter candlestick. If I look at the last year, so that's basically Q2 is started with this candlestick, Q1 of 2023 is this candlestick, Q4 of 2022 is this candlestick, and Q3 of 2022 is this candlestick. So basically from June up until April, where we are, and we're about to, the next candlestick will be the June candlestick for financial Q3 of this year. I hope I haven't lost you. We need 3 financial quarters to make 1 year. When I look at the last 3 candlesticks on this chart, right, all I'm looking at for now, up until this financial quarter candlestick closes, right, it just started. But for now, everything that I'm looking at for now is simply just a basically potential continuation pattern on price for now. This is just basically continuation pattern on price, which means, right now looking at this chart, just based on USDZAR, there is room for more upward momentum. It's very difficult for me to see a scenario where price would be, swinging to the lower side on this big time frame, right? So now we're going to move to our governing time frame, which is a much more realistic time frame to start planning midterm to long-term trades, right? The governing time frame is our monthly chart, and you can see immediately it offers very clean supply and demand levels. Not only that, but also price is sufficiently arrived at this supply and demand levels. So now we want to check, triple check, double check, triple check the zones. And if you look carefully here, we have a situation like this. Right, so this is the supply, clean imbalance all the way to the side. This is that demand that was broken earlier on the either the presidential chart that we're talking about, right? This is whole area is still that very, very big and multiple demand levels being honored inside that 1 year zone, as you can see for yourself there. I'm just painting a clear picture now of what's going on. There's actually a shortcut or a very quick abrasive lesson to multiple time analysis, right? So now if you ignore zone 1, which is a 12-month chart, and this that I've just drawn now inside the 12-month chart, and we just focus on this one here, this big zone here, the one at the top is that 3 months demand I spoke to you about. In it, we can start to contact has been made and price has rallied already from it. I am referring to this 2022 February, March last year demand, right? Price literally made a bullish engulfing pattern, made contact, and then rallied all the way up into a supply. When price got to a supply, we need to actually acknowledge the fact that the supply has tried to work. Price created a bearish engulfing pattern in response to that, but immediately went back up, which makes sense, right? Because we say on the presidential chart, we saw a potential continuation pattern, an urging to go back up. Why? Because when I start to teach you guys about sequence alignment, you'll notice that this 1 month supply is not really in complete alignment with any other supply. There isn't a presidential supply on the 3 months chart. There isn't a 12-month supply. So this governing supply is holding the fort by himself, right? So he only has a short time to control price, short in terms of positional thinking. That could be 3 to 6 months, right? He only has this amount of power. Yes, it could be that price could sufficiently fall. We know that there's dollar weakness. We know that looking at the last 3 other charts we've looked at, Euro USD, Pound USD, those charts indicated that, it might be time to go risk on again in the markets. Last year we were very risk off. This year we might be risk on. I'm not yet ready to call the bells, but I could be behind the curve. I have been away. I should be hearing from you guys in the comments. You guys should be keeping me up to date. Let me know what's been Powell saying. I genuinely haven't started researching that stuff, but to me, when I'm looking at these charts, it seems like there's been a slowdown in maybe interest rates, or maybe there's been a complete stop, or maybe the money markets has started printing again. I don't know, right? So now what we want to avoid, we don't want to make silly retail mistakes. We know we want to buy long term, but we can't buy inside a supply. That's very dangerous, right? Buying a supply is very suicidal. But we also can't ignore the fact that the second supply that was made has been slightly broken, right? This supply has been broken, but it doesn't mean it's now victory for the buyers, because they're still in control of a governing supply. What you want to do now is to take careful note following zone. So now I'm going to go down to weekly. In the weekly time frame right there, and I really wanna deal with the weekly now in a slightly much more clinical manner, right? So I can remove this zone here. You get what I'll say. So I'm in the weekly, and all these demands, by the way, are in the weekly demand, which are in the governing demand, which are in the 3 months demand. Remember this, right? That's very significant confluence, right? All the way down here, we can only visit this demand later in life. We have to break so many demands to get here. So that's not really our area of focus. Our area of focus right now is going to be a zone like this that's already been tapped. So I'm going to now start to readdress this just to make it neat and user-friendly, something like this, because it's still weekly, can still be quite a big zone. Why? We've got one fresh touch into this demand, right? That's number one, and we could get another touch here, right? So this is, symbolically realistic. If you're in South Africa, you know that, the exchange rate always fluctuates between 16, 17, 18, right? At least all of last year, right? This is 2022 June. It was between 16, and the highest was ever last year, October 2022, was 18, right? So we could come back to 16. But that being said, we must slightly acknowledge the trend. As the trend, another demand that was created. Now I want to quickly investigate that, and you can see this demand was tapped. Wait, maybe I didn't draw it correctly. Let's see. Right, cool. So this demand did hold the test of time, but price has played a lot there, right? We call this incredible glass effect, right? It's all in module one. I'm not here to teach basics, guys. I'm just here to quickly mark up this test, right? So we could have a problem here, right? One could assume that this demand area is going to fail, right? And time will tell, right? Price didn't really seem to live with much confidence when it rushed with the bullish engulfing pattern, but price, you know, to its own merit from that particular demand, does ignore a supply right here. Right, so clean break to the upside, number one. Number two, a second break, right? So there's this very strong unction to move to the upside here, right? So we want to take note of something like that. And very vaguely, I'll leave this zone here, but I'm going to mark it white. It's not my most confident zone, but I'm gonna leave it there because a lot has happened from this supply, right? This demand. This demand has successfully managed to take out two supplies. You know, one would argue two strong supplies. Supply number one here, bearish engulfing pattern, following, you know, a slightly short-term lower curve all the way back up here, taking this out and taking this out, right? And still within the broader monthly governing supply. Now let's break the monthly governing supply down, because that will make sense to understand what is currently in control right now in our trading. Within the monthly supply, the governing supply, we've got this weekly area of value, right? And that's really where price keeps bumping. So the weekly supply is inside the gas. Very much detailed about 4 or 5 2-hour lecture videos on this kind of stuff. Now it's time for you to be mastering sequence alignment, which I'll be teaching on very shortly as we warm up this year. Right, so check this out. Look, so price dings in here last year, October, then markets come back down in January this year, and then price makes it back there, right? So this weekly supply has been dented quite, you know, seriously, and any supply attempts made within the weekly supply have also been, you know, removed, right? So that's interesting for buyers to take note of, right? What we want to do, and if we can, is also then to double confirm if this demand, was it because of this demand here only, or was it only also because that this demand was an order flow strategically left here with a lot of money to create a retracement back to the upside? The only person who can tell us that, you know, is Fibonacci. So I draw out my Fibonacci and bang, wham, sam. Right, as usual, we've got our popular 50% order block at play, which is a very big signal, right? It's actually one of the 50% level is very much, generally speaking, in line with a lot of support and resistance trading theory, and it plays out, right? It plays out quite a bit in the markets, right? So there we go. Markets come back to that 50% level, airing into the order block within the golden ratio, and markets go back up. So to me, supply has been tagged, but buyers seem to be placing, you know, trampolines or jumping castles along the way to hold. I don't know if this area is going to hold, because historically speaking, it's been drained. It took a lot of buys. You see how price dip, a lot of buys to take out this supply, right? So anything can happen in this area, but price did, you know, parachute to the upside. I'm going to remove this line not to confuse you. Don't forget these two lines, distal and proximal lines, mark an entry point and a stop loss point for a weekly supply. And you can see the weekly supply is about to be taken out. In an attempt to readjust this, in an attempt to match the weakness of the current dollar, we can see that about 2 to 3 weeks ago, towards the end of March, a new supply was created within that supply. And that's where price currently is right now. I repeat, a new supply within the embedded supply. So if you're tracking your COT data, this is where you start to understand those order flows, right? You just come back, go back to the month of March, look at the increase in shorts on DXY and tell me what you see. And then tell me if what you saw on the news feed, NFP, CPI is shocking. Just, I'm back. Nothing is random. I'm back, right? You guys had almost 4 months to prove me wrong. Those of you who have taken my lessons carefully, right? So like I really hope you felt what it was like to be, not to be there to hold people's hands, and really something that I don't like doing in general, right? All I want to do is to equip, empower, right? Equip, empower, and move. Equip, empower, and move, right? So please, if you've been back testing, if you've been trading, if you've been analyzing, get back to me and let me know if we wasted time together last year, or if there's anything else that we need to do, because this is all those weekly videos I made, almost 48 videos in a 52-week, every single Sunday, really have accumulated this type of knowledge, right? So markets then push very hard into the supply. Remember, we're now bandaging a banged up zone, and I'm taking too long on this analysis, right? So let's drop to daily, the daily time frame. So now this is the daily supply within the weekly supply within weekly supply, if you get my drift, right? So I'm going to tighten the zones up now just to see what's going on. So now we've got the daily supplies here. Does this up count? Yes, clean imbalance breaking, right, at demand. The white lines, don't be confused, are just the proximal lines and the distal lines of the weekly supply, but we can remove them from now. We're going to look left first. Why? We want to keep track of what's been going on with all the supply zones on the daily time frame. I'm going to put a horizontal line right there. You can see all of this now is hogwash. It doesn't matter, right? Everything else above these areas is liquidity graphs for retail traders. Anyone who's trading up here will get chowed one day. Eventually, if you keep thinking resistance, boom, you're going to get stop loss hunted, right? It's just the game now. We know that there is no sell pressure on this particular left. Let's move on to the ultra left, right? More left. Let's see what zones are waiting for us here, right? So now I'm going to draw some lines. I assume that this was the first one where price really gathered a lot. It's also the daily supplies on which I would assume has a lot of that weekly proximal lines that we drew. I've got bearish engulfing and bearish engulfing together combined, so it's just one big zone. I'm not gonna, try and micro this. I'm not even gonna break it down on the H4 time frame. And you can see we've got that similar play here. So we can agree that those two daily supply zones have been taken out here. You can see this. You can see this right there. Look at this long wick. Those two daily supply zones no longer that. Now I'm looking for something slightly higher. This is not a bearish engulfing, but it does give us a imbalance. Right? So this is probably also where, if you go to my module one, you go back to the monthly time frame, I bet you this is one of those original, major turning points of sorts. Maybe it is. I mean, if you, I'm too lazy to go back in time. But what I've done is now I've taken out, the most highest supply within the monthly supply, within the weekly supply, to see where we stand, because all these other supplies are pretty much exhausted. So my areas of value for USDZAR are between 1857 and 1943 in terms of supplies in the way for the long choo-choo train. The long choo-choo train is that train that we spoke about. We could go Akini Hashi to just get some coloring, to get more clarity if we want to. Let's give it a second. On the daily time frame, which for serious risk takers, this is where it's at. This is where the party's at. And I say risk takers because price is coming down quite parabolically from this recent supply. There isn't much distribution, so there's a high chance that the zone could completely break and then go up, or break and not go up at all, or really go down, take out your stop loss, then go up, right? It's too parabolic for my liking, right? So we really the most attractive areas of value on the daily time frame would be the daily demand that's resting on that weak zone, nested within the weekly demand zone. I hope this makes sense. I really pray it does. If it doesn't, hit me up on the comment so that the other videos coming about, I can answer some of these questions, but also do yourself a favor and check out the course, right? So, and if you pull up a Fibonacci, we'll get the same results, right? So if this area breaks, oh, how beautiful and rewarding it would be for a patient trader to catch a buy here. All right, me with the dollar being so weak and all that kind of stuff, and I don't know what the sentiment is, but when I catch up with sentiment, it would make sense to be cautious when to buy a weak dollar, even though it's against the ZAR. All right, but this is the total length of the data set, 365, man. I hope you guys this helped. Hope it made sense. Yeah, I do hope you. I'm looking at the imbalance here. If I would like, I could do something like this, right? I'm tidying up on the Kinashi, and this is what it looks like, right? This is what it looks like. So on the daily time frame, I'll be worried. I'll be worried about this, number one, right? So this area that you're approaching to could simply be used as a seller's retracement area, right? So price could do this because it's very parabolic, right? Only to go back here, right? So come back in here, to really search area of value, and then we get our proper long-term buy somewhere there. The idea here of this video is for you to understand where the hell price is going for the year 2023. That's how we started 2022. In January, February, all of 8 war rooms, in January and February, about 6 war rooms to be precise, we're focused on getting our hand on the pulse for the tone of the whole year. Because when you understand the tone of the whole year, which is actually a word for trend for the whole year, you start to trade along that. I never did nothing else last year than sell. There's a reason why we last year, one of our successful years, trading transparently in front of people here on YouTube, right? Because I understood the past. Now, I wasn't around in January, February, March, and parts of April, right? I've been away. So this is me. I'm reclimating myself to the markets. And I hope as I take this, instead of doing it silently by myself, it's slower doing it this way, a video at a time, right? Instead of sitting through 8 assets a day by myself. But I'm hoping you're taking this time to learn. This is free, right? This is literally on YouTube to learn. For the deeper understanding of the mechanics, please do feel free to check us out on the link down below and register for our course. But this is, look out for this. Look out for this play on USDZAR. Peace and love, everybody. Good to be back. Don't forget to like. Don't forget to share. Let YouTube know we're back. I really appreciate that stuff. You know, I really appreciate the feedback. Till next time.